Hey everyone, don't mind me. We gotta talk about the crypto crash that's going on. There's a lot of stuff going on over there and in here as well. But we gotta talk because there's a lot that's happening. Okay, here's the first thing that we know. Active wallets, folks. Active wallets. One of the problems that we're having right now in Bitcoin is active wallets, which is one of the measures that we can use to gauge trading activity, has stalled. We hit 1.2 million actively trading wallets about a year ago today. Now we're down to 971,000. This means we're down just roughly 20%. Now, because of this, there are some suggestions that we could set up a liquidity squeeze that might cause something very similar to the December flash crash that we saw, which we've been seeing Bitcoin fall pretty substantially today. Let's go ahead and look at the chart and then look at some of the other reasons for a fall that we have, because we've got four really big ones. The first one, though, without a doubt, the plummeting in active wallets and the amount of active accounts actually buying the dip. So in December, we had this substantial kind of flash crash right here. Flash crash is really defined as a sudden sell-off, generally driven by liquidations. That's what we had on about December 3rd. That was a pretty bloody Friday in the stock market, and the way Webull kind of shows the 24-hour here, it always seems to show it the date about a day later, but that might be because they're using GMT time. But anyway, what's important here is that, yes, some form of liquidative flash crash and then recovery, which we recovered within that same day. I mean, we fell down to 42,383, and then within the same day ended up closing at 49,800. It's a pretty substantial difference there. We were still down 9.25% that day, but certainly nowhere near as far down as we were intraday. And there are concerns now that we could see that same sort of wicking happening over the next few days to few weeks. And part of the reason for that is if crypto continues to trend down, whether that's because of its correlation to the NASDAQ or some of the other reasons that we're going to talk about in this video, it doesn't help when you have less actively trading wallets. Now, sometimes that's because people are taking their cryptocurrency out of hot wallets or brokerage accounts and they're putting them into cold storage, which means they're not being actively traded, which can sometimes be good if more crypto is being locked up as essentially a store of value, then potentially you have less selling pressure. But unfortunately, the opposite is actually happening right now at the same time as having less overall traders. And so that's another issue that we face right now. So number one issue is a decline in active wallets. Number two is a record transfer of cryptocurrency, specifically Bitcoin, from cold storage to brokerage accounts. We're seeing a large transfer. So this should imply more trading, but so far it seems to be materializing as selling pressure, at least based on the current price activity. Now, another issue that we're facing is reduced volumes and open interest in futures trading. Now, some of this could have to do with the same reasons in terms of us seeing fewer trading accounts in crypto, but according to the Chicago Mercantile Exchange, we are down from an all-time high of $17.4 billion of crypto futures trading. Actually, I'm sorry, Bitcoin futures trading, just Bitcoin. $17.4 billion of Bitcoin futures trading in October, which is just 2.5 months ago. And we are down to 10.6 billion. That represents a 39% drop in trading. Notice how much of this is related to trading and how little is actually really at this point related to hodlers or diamond handers. It's really traders that make the market. And we've heard this before, that institutions trade 70% of the crypto that trades, that institutions are really the ones driving price actions. And if they need to hedge against risky style assets and they need to beta hedge, one of the things they'll do is they'll sell things that have that have an elevated beta. And unfortunately, tech stocks within the S&P 500 have a high beta, and the correlation between Bitcoin and tech stocks keeps getting more and more clear. So if hedge funds are selling off tech stocks because of what's happening with the Federal Reserve today providing a completely disastrous account of what's happening in the economy, albeit that was about a 3-week-old meeting that we just reviewed or got the minutes for today, it's still weighing on crypto as well. Just to give you a very, very sort of brief synopsis of essentially what was talked about, we had talked from the Federal Reserve about having the largest balance sheet ever, high inflation, more short-term bonds than ever before, risk to the upside for inflation, risks to the downside for the economy, and that inflation is broadening. And last week, we talked about how a cryptocurrency, specifically Bitcoin, is not at all trading like an inflation hedge. In fact, it's trading much more like a risk asset or risk on asset or textile asset. And we saw this when we broke down the catalysts last week of how crypto is moving in relation to what sort of activity is happening in the actual marketplace. And so you might remember this. Remember we wrote what moves Bitcoin? Well, folks, fear about inflation going up and fear about the Federal Reserve raising interest rates moves Bitcoin down, not up. Because what moves Bitcoin up is money printing without inflation. So a brief summary would be Fed fears and high inflation equals bad for crypto. Lower inflation, accommodative Fed, good for crypto. So that's just another one of the reasons that we're facing right now. So far we've got quite a few. We've got a decline in active wallets. We've got volumes and open interest declining. We've got more transfers from wallets to brokerages. Then we've got this correlation between the Fed fears, NASDAQ, the technologies all rotating to the downside, also hurting crypto. And the last thing that we've started seeing, although this is not, I don't really want to call this the fifth catalyst yet, so that's why I'm only really saying 4, but it's just another one that we really have to pay attention to, is Bitcoin liquidations. In the last 24 hours, we've had over $500 million worth of crypto liquidations. Let's take a look here. Actually, now at it's actually ticked up. Right now, we're sitting at total liquidations at over $740 million of all cryptos. If I just sort to BTC, we're actually at $282 million of just BTC liquidations. For Ethereum liquidations, we're at about 143, Solana 17, DOT 9.71, XRP actually 16.7, so moving up a little bit, jumping to MATIC 7, Mana, Algo, you can play with these here. But if we jump on over just to see this graphically, we could scroll here and see this elevated pain here in liquidations. And this generally is associated with a decline in cryptocurrency prices. So these are a lot of issues that we're facing right now, all at the same time. A decline in active trading wallets, people trading less, maybe they have less money to buy and go shopping. We're seeing futures volume decline. Remember BITO, that was the Bitcoin futures ETF? That surged to $1 billion in assets under management within the first 2 days of trading. Right now, it's only at 1.2 billion. So I guess I shouldn't say only because that's still technically up 20%, but it had most of its growth the first 2 days and then just sat there. So decline in active wallets, a decline in futures trading, an increase in liquidations, Fed fears, all of these things combined are creating a lot of FUD in the cryptocurrency market space, to where while you still have some analysts who are like, don't worry, we're still going to 100K, there are a lot of people who are getting vocal coverage right now about, oh no, don't worry, sell your Bitcoin now because we're going down a lot further before we go back up. Now, I don't know, but let's take a look at some of the technical analysis. I will say, if we get a full break under where we are now, which is a line of about 45.7, we are potentially knocking on the door of 37,592 again. That's the next stop. Then, of course, we've got some soft stops in the mid-30s. The red lines here are softer stops. Harder stop at about 32.6. And then we get some strong support lines on that 30, 31, 30, and 29.2 level for BTC. So hopefully we don't have to trend in this direction, but right now we're definitely not jumping up and down with the fake out rallies that we've been getting from Bitcoin. Multiple different fake outs here to try to get us off of support, and this Fed meeting information was really the nail in the coffin to help push us over the edge to the downside here. Ethereum now under 35, same sort of break to the downside, not great because the next stop could be 25,100. We go ahead and jump on over to ADA. ADA sitting at 122. Next stop brings us right back down to $1. Look at this, how we're playing these support lines almost perfectly. Take a look at this. You had your breakout uptrend, got rejected by that 150 and came right back down to support. I'll tell you, basic technical analysis, or the kind of information I teach in the Stocks and Psychology of Money course, is extremely critical when you are investing in cryptocurrencies. The same thing here. Take a look at this. You bounced off of the 147. This is all in the day chart. You broke through 187, but got rejected at 206, only to come for a brief landing at 171, and now Solana is rejecting right back down to about 147. Again, over and over and over again. These support lines, which I don't move, I leave them stable. Only time I ever move them is totally by accident, but if you look at my past videos, you see they're always consistently at the same spots. ADA, Solana, Bitcoin, Ethereum. Let's go ahead and take a look at MATIC. So here's MATIC. Don't have many lines drawn for a MATIC, but clearly a rotation down here. We're still on an uptrend, I would say sort of a more broad uptrend from the middle of December here. We could see that trending nicely up here. We are getting higher lows, which is good. We're not really seeing higher highs anymore. We were, so we'll see what ends up happening here if we end up converging down and finding a new support level. But right now, that's a little difficult to determine exactly where that might be. We could do a Fibonacci retracement. What if we went ahead and did that, and we took I'm going to go ahead and measure from the floor that we had in September. This was really before the rally, and it kind of ignores all of the madness that happened in the summer. So if I go ahead and draw down from a peak here on Fib and pull down to the bottom here, it looks like we're getting close to bouncing off of that 197 line on MATIC. We got stuck around the 78.6% line at 2.52. But of course, next stop after this, if we end up hitting that 197 level, could be 175. So it gives you a little bit of perspective into some of the drama that's going on. I think a lot of this is, ultimately it comes down to what you believe as to whether or not it's overblown or not, what's happening with the Federal Reserve. If you believe that the Federal Reserve has lost its plot and inflation's going to the moon, you probably don't want to be in tech or risk-based assets, or quite frankly, crypto to some degree, because it is trading as a risk-based asset, not an inflation hedge. If you believe that the Fed is overreacting and we're going to see an inflection point to the downside in inflation and a return to some form of accommodation from the Federal Reserve, even though technically we're still accommodative right now, the fear is that the Fed's going to tighten substantially, then in that case, maybe it's these are all perfect opportunities to buy the dip, and hopefully you'll get rewarded handsomely in the future. If you want to see all of my moves, make sure to check out the Stocks and Psychology of Money course. Every time I buy or sell something, you get access. Check that program out, link down below. Folks, I really appreciate you being here. If you found this video helpful, consider sharing the video, and folks, we'll see you in the next one. Thanks. Bye.